Jared Ripplinger, a CPA with Cook Martin Polson. I've worked with a lot of businesses in a variety of industries throughout the years, helping them to take advantage of the available tax benefits for their businesses. The purpose of this video presentation is to educate you on some of the basic principles and concepts in the research tax credit, as well as to give you some ideas on how you can better take advantage of this credit if you qualify. There is a federal tax credit of up to 10% of qualifying research expenditures. Utah also has a credit of up to 10% of qualifying research expenditures, and Idaho has a credit of up to 2.5% of qualifying research expenditures. Here are some interesting facts about the federal research tax credit. The credit's been around since 1981, and there are over $5 billion of the federal credit given out annually. Approximately 80% of the dollars of this credit go to a few of the nation's largest companies, primarily Fortune 500 companies. This credit can be claimed for all open tax years, which is generally the past 3 years plus the current tax year. The credit applies to development which is technical in nature, relating to a new or improved function, performance, reliability, or quality. It's important to note that research related to style, taste, cosmetic, or seasonal design factors does not qualify for the credit. In order to give you a good idea of what types of businesses may qualify for the credit, we've included a list of several industries that often qualify. Keep in mind, this list is not comprehensive, so there may be a number of other companies or industries that may qualify which are not listed here. Businesses that often do qualify, however, include technology companies, manufacturers, machine shops, tool and die makers, software developers, companies that develop software as a service, providers of cloud-based technology services, biotech and pharmaceutical companies, chemical laboratories, architecture and engineering firms, as long as it's for the non-cosmetic elements of the designs, oil and gas exploration, telecommunication companies, or other domestic companies applying for or being granted a U.S. patent, as long as it's not merely a design patent. In order to understand how the credit is determined, it's important to understand what a qualifying research expenditure is. Keep in mind that the qualified research expenditures, or QREs, must be determined separately for each business component. A business component is defined as any product, process, computer software, technique, formula, or invention which is to be held for sale, lease, or license, or used by the taxpayer in a trade or business. Also, any plant, process, machinery, or technique for commercial production of a business component shall be treated as a separate business component and not as part of the business component being produced. IRS regulations require the taxpayer to identify the uncertainty, identify one or more alternatives to eliminate the uncertainty, and identify and conduct a process of eliminating alternatives. In the IRS's proposed regulation, which was released in September of 2013, they introduced the definition of a pilot model, which is defined as any representation or model of a product that is produced to evaluate and resolve the uncertainty concerning the product during the development or improvement of the product. The term includes a fully functional representation or model of the product or a component of a product. We've included several examples of what may qualify for the research tax credit, including molds, specialized tooling, jig development, a process for milling unusually shaped parts, testing different methods for machining particular materials or parts to determine the best method or material for that particular part. Also, prototyping, which may include producing a physical product, 3D printing, computer simulation, or it may be experimentation with simulation software such as CAD, CAM, or SolidWorks modeling, and resolving difficulties associated with complex new materials, and finding the right balance between the desired completion time for a process versus the durability of the tooling or fixtures. Experimenting with different methods of bonding multiple parts or specific types of materials together. Redesigning a product to perform a function more efficiently or with fewer parts. Redesigning a product structure in order to reduce materials but maintain the strength of the structure. Development or improvement of production or manufacturing processes, automation of internal processes, and custom equipment modification, as long as that is not just a duplication of a previous custom job. For the engineering and architecture industry, qualifying activities may include building design, as long as it's related to structure, energy efficiency, or other scientific features of the building, infrastructure design, such as roads, foundation work, bridges, water treatment systems, environmental remediation, drainage system design, solid waste system design, and HVAC system design. Qualifying activities in the agricultural and food industries may include development of agricultural products that increase the yield or the shelf life, agricultural engineering, such as creating new breeds of a crop, disease resistance, or other specific crop features, also developing products to meet special dietary needs, such as gluten-free or low-carb foods, food processing methods, developing useful byproducts from existing activities, or new and improved packaging systems. For the biotech, chemical, and health-related industries, qualifying activities may include chemical engineering, product formulation, biological and pharmaceutical development used to treat or prevent diseases, development of products or processes used to diagnose diseases, or development of technology to comply with health regulations. Also, development of technology to comply with environmental regulations, new or improved oil and gas exploration equipment or methods may also qualify. In the computer-related industry, web development, as long as it's relating to non-cosmetic elements, development of cloud-based technology, development of new software, improvements on existing software, as long as it's not merely debugging the software, development of telecommunication technologies, and development of internal use software where software is not commercially available. The following activities are specifically excluded from qualifying for the tax credit: research conducted after commercial production of the business component, research on how to adapt an existing business component to a particular customer's requirement or need, duplication of an existing business component, surveys and studies, such as efficiency surveys, market research, testing, or development, routine data collection, routine or ordinary testing or inspection for quality control, foreign research, that is, not done inside the U.S. or one of its territories, research in the social sciences, arts, or humanities, or research funded by another party or by governmental entities. So, what is the research credit based on? It's based on the following 4 categories: wages for qualified services, cost of supplies, rental or lease costs of computers, and contract research expenses. And just to note on the wages, if substantially all, meaning at least 80% of a particular employee's wages meet the criteria of being a qualified research expense, then 100% of that employee's wages can be included as a qualified research expense. As mentioned in one of the earlier slides, there are many states, including Utah and Idaho, that offer an R&D tax credit for research activities conducted within the state. The state credits are generally based in large part on the federal R&D credit law, and it's always important to consider the state credits where available, because a business may qualify for a state research credit even if it doesn't qualify for the federal research credit. Proper documentation for the research credit is very crucial to claiming the credit. The IRS regs require a taxpayer to retain records in sufficiently usable form and detail to substantiate that the expenditures claimed are eligible for the credit. The same regulation states that to facilitate compliance and administration, the IRS and taxpayers may agree to guidelines for the keeping of specific records for purposes of substantiating research credits. In order to illustrate the importance of proper documentation and tracking for the credit, we've summarized some recent court cases to illustrate several points. In Union Carbide's case, it was determined that they were including costs incurred in producing goods for sale, not in conducting qualified research, so those costs were disallowed. Bayer Corp was tracking costs based on their cost centers rather than individual projects or individual business components, which resulted in the disallowance of some of their research tax credits. In Chamois' case, officer wages were disallowed due to inadequate substantiation of their allocation to the qualifying research activities. And finally, in Davenport's case, the taxpayer failed to document how the activities claimed for the research credit constituted a valid process of experimentation. It further illustrates the importance of evaluating whether design alternatives were considered and the existence of the uncertainty. Some possible examples of documentation that you may include for your business would include diagrams, schematics, notes, expense allocation logs, time logs to substantiate wage allocations, documentation that supports how the activities underwent a process of experimentation to reduce or eliminate the uncertainty, and other relevant forms of documentation and record keeping, including testing of alternatives. So what is the IRS looking for in documentation? We've taken the following out of excerpts from the IRS Audit Techniques Guide. Keep in mind this is a manual that the auditors are given and what they're trained from on what to look for when they're performing an audit on the research tax credit. First of all, for wage documentation, they need to identify the employees whose wages are claimed as qualified research expenses and determining the services they perform. And for the IRS auditor, they're saying this is perhaps the most important phase of auditing the research credit. So they may look at payroll records, employee job descriptions, performance evaluations, calendars, and appointment books. The goal on this is determine what the employee did and how much time they spent doing it. For the supplies expense, the IRS auditor is primarily concerned with determining that the supplies were in fact used in the performance of qualified services, not for any other purpose. They're also directing the auditors to carefully scrutinize prototype expenditures to determine whether the prototype is or contains property of a character subject to an allowance for depreciation, which would disqualify it from qualifying for the credit. Some examples of costs that specifically do not qualify as qualified research expenses are travel, meals or entertainment, telephone expenses of researchers, relocation or rental and lease expense, professional dues or royalty and license expenses. Also, under documentation for supplies, the IRS notes this to their auditors: supply qualified research expenses in general should represent a small portion of total QREs. When supply QREs are substantial, you should be alerted to the possible inclusion of capital or other ineligible expenses being claimed as QREs. For contract research expenses, the auditor is going to request a list of all contracts. Just to note, the contracts are usually in writing, but they're not required to be in writing. However, they must be entered into prior to the performance of the qualified research, provide that research be performed on behalf of the taxpayer, and require the taxpayer to bear the expense even if the research is not successful. Qualified research is performed on behalf of the taxpayer if the taxpayer has the right to the research results. Qualified research can be performed on behalf of the taxpayer, notwithstanding the fact that the taxpayer does not have exclusive rights to the results. You may wonder, if your business shows a loss this year, if your research credit will be wasted. The federal tax credit can carry forward for up to 20 years if it's not used up in the current year. And Utah actually has 2 credits, one of which can be carried forward for up to 14 years, and then the other part of the credit expires if it's not used during that tax year. Idaho has a credit which also carries forward up to 14 years, just like the part of the Utah credit. You may be wondering how Cook Martin Poulsen can help you with respect to the research tax credit. At Cook Martin Poulsen, we specialize in helping small businesses develop systems and procedures that help them to claim the federal and state tax credits. We can help you with assessing the eligibility of qualifying for the credit, quantifying the applicable expenses, documenting the expenses, calculating the research credit, and finally tracking the carry forward of credits. Please contact us to set up an appointment so we can meet with you about this important tax credit.